Business news now, and some blowout inflation numbers from the US. Consumer prices rose by an annual rate of more than 9% last month, the fastest pace in more than 4 decades. Meanwhile, the UK economy exceeded expectations in May, and that could lead to big rate hikes on both sides of the Atlantic. But some relief may be on the way. Oil prices are falling, which could lead to lower petrol prices down the road. Here now to discuss the business headlines of the day is once again Arise business correspondent Laurie Laird. Laurie, let's look at those US inflation numbers. Really are incredible. Well, they surprised investors, didn't they?
Absolutely, and you had the misfortune of being in the newsroom when these came out, and you heard me squawk across the room. Honestly, I really am shocked. Up 9.1% year on year. This is the sort of inflation that you see in an emerging market. In fact, I don't think inflation in a lot of Southern Africa is quite this high, and we've got the usual suspects. Food, energy, they're both being so greatly affected by what's happening in Ukraine, by Russia's invasion. But this is becoming much more broad-based inflation, and this is very much going to scare the financial authorities. It's not just food and energy anymore. They were the big problems. Energy was about half of that 9% rise, but the other half is 4.5%. That's more than twice the Federal Reserve, the central bank's target. Apparel prices up 5%, food at home, so this is what you buy in the supermarkets, up 12%. New car prices up 11%. Shelter, which looks at rent and what you would pay if you rented your house out if you own it, up 5%. So it's not just food and energy anymore. That was scary enough because food and energy are not discretionary items, but it is becoming so much more broad-based.
Across the whole board. So with that, an interest hike won't be far behind then.
And it won't just be an interest rate hike. This one will be an absolute doozy. Some people talking about the Fed. The Fed will meet again in later this month. Some people talking about a full 100 basis point or 1 percentage point hike. This is absolutely massive. And it sounds unprecedented, but the Bank of Canada, which is facing less inflation than the U.S. is right now, hiked rates earlier today. Again, they went that full percentage point. Really shocked the markets.
And of course, higher U.S. interest rates will reverberate further afield.
And I'm so glad you point that out, because it's not just, it sounds like we're talking about just an American story, but remember, so many countries, particularly emerging market current countries, borrow in dollars. They don't tend to borrow in their own currencies. They borrow in things that are much more convertible, sometimes euros, often dollars. Every time interest rates rise in the U.S., any country that has borrowed in dollars faces much, much higher interest payments. Let's look at Ghana, which has just gone to the International Monetary Fund for a bailout. They pay 44%. This is just a staggering number.
It really is.
44% of government revenues go straight out to pay interest on debt. So when U.S. interest rates go higher, so do those interest payments.
Let's turn to the UK, and it's been a while since you've had a happy, positive economic story here.
Absolutely.
But some stronger than expected numbers.
Absolutely. And it's a little bit glass half full, glass half empty, but let's go with the glass half full first. Yep, GDP up 0.5% in the month of May. UK is a little bit unique in that we see these monthly GDP numbers. The UK Statistical Bureau is really, really on it. I know I sound biased here, but they give us these frequent updates. It means it's a lot easier to see turning points in an economy. This 0.5% is so much bigger than anybody thought. We'd had 2 months of contraction. A lot of people thought we might have got a 3rd month of contraction. So on the surface, looks like very good news, but there are a couple of anomalies here. The biggest contribution to growth was people going back to their GPs, to their primary physicians.
Sounds remarkable.
Doesn't it just? And it's a very difficult thing to measure, because here in the UK, we don't tend to pay to go to our GP, yet it is part of the economy. So there's a lot of assessment, a lot of estimate that goes in trying to put a price on those GP visits. But the story here is that for so many months, people were isolating with COVID. They're now feeling a little bit more confident. So they're going back to the GP for those smaller things that they had kept them out of the GP's office for so many months. That was the big contribution to GDP. Some of the bits of the numbers were a little bit concerning. Things called consumer-facing services. So this is if you go to a restaurant, if you go to a bar, try and picture what that might be like, a hotel. That actually fell, and that gives you a sense that people aren't feeling all that confident. They're not going out the way they were. Retail sales were very weak.
And of course, we heard there from John Cookson from Westminster, giving us an update on the current state of play of the leadership race. No doubt those remaining candidates will be watching these numbers closely.
Absolutely, and here's why. This strong-ish May number will certainly take away any impediment that the Bank of England may have had to really affect a very big interest rate hike. They've been raising in tiny little increments. Some of the members who vote on interest rates here want a bigger rise. I think that the MPC, the Monetary Policy Committee that sets interest rates, will look at this and say, wait a second, economy's not falling off a cliff. Inflation also above 9% here in the UK. We can afford to do a much more aggressive interest rate hike, and that means anyone who borrows here in the UK is looking at some higher repayments, mortgages, credit card debt.
But oil prices have begun to fall.
Absolutely. This is a remarkable thing. All we've talked about right here is inflation. One of the big contributors is oil prices. Oil prices fell off a cliff yesterday, fairly stable today. But last night, after we finished on the European day, real sell-off in the U.S., down about 7%. We're now below that kind of magical $100 a barrel level, and it looks like we're going to stay there. We're comfortably under there now. That could mean somewhere down the road that energy prices begin to abate, and that could take some of the sting out of inflation. Although, as I said, inflation is becoming much more broadly based, not just in the U.S., but all over the place.
And just quickly before we go, the battle for Twitter, give us the latest.
This one will run and run. Hopefully we'll get some time with this later in the week, but the betting is still that Elon Musk will really struggle to get out of this deal, and as evidence of this, Twitter shares up 8%. That tells you investors think this deal will be done somehow, maybe at a lower price, but somehow this will get across the line.
So do you think he will ultimately have to go through, and that court in Delaware will enforce him to ultimately go through with this deal?
Quite possibly. Courts in Delaware tend to favor companies, but what may happen is we see a much, much lower price. Twitter shares, even with this rise today, still trading about 25% below Elon Musk's offer price. So he is really going to want to look for a renegotiation of this.
Do you think he's ultimately regretting making that bid now?
Quite possibly, but this man is so difficult to read. It's like trying to get into the mind of Donald Trump. He bought this stake, said, I don't want anything to do, I don't want to buy this thing. Then he decided he was going to buy it. Twitter said, we don't want to be sold, we don't want to be sold. Now Twitter going to court.
Things have gone full circle.
Yeah, absolutely. Twitter not going to court to enforce this deal has a little bit to run this one.
Arise business correspondent Laurie Laird, as always, thank you so much.